flashing on the screen now, and that stock is now down 5%. The net profit of 16 crores. We'll wait for some more numbers, but this doesn't look like a good number, and that's why you've seen the stock take that big tumble, 181 now on the stock. So that's the only number that we have at this point in time. Crompton Greves numbers have the potential to either re-rate or de-rate the stock, so that's something that we'll find out. Consolidated net profit of 16 crores. Anything else that you have,
Yes,
Sonia?
there's a big drop that we've seen in their revenues as well. 1,840 crores versus 1,900 crores same time last year, and versus 2,100 crores last quarter. So there's a drop that you're seeing in their revenues, and that is resulting in their lower profitability as well. There is an exchange gain that they're seeing this quarter, but despite that, the profits have seen a big miss for Crompton Greves. So we'll wait by for more details. Look at the poll was about 75 crores, and the net profits have only come in at 16 crores. So we'll just wait by to see where the miss has come in this time around. Okay, I'm just going by the segment-wise revenue. The big miss has come in the power systems business. Over there, the revenues, Anuj, have fallen to 390 crores in power systems versus close to 600 crores same quarter last year. So there's a huge slide that we've seen in the power systems revenue, and the power systems business has made a loss this time around of 26 crores, the loss in the power systems business versus a profit of 46 crores same time last year. So that is the key culprit for Crompton Greves.
Yes, indeed. In fact, this looks like an ugly number. There's no way to describe that. EBITDA as well, 79 crore versus pool of 177 crore. As Sonia also pointed out, a couple of divisions actually reporting losses, not looking good at all. The net profit of 16 crores versus 75 crore. And tell you, Sonia, one more funny thing about Crompton Greves is the same thing. On these earnings at 180, the stock is more expensive than it was at 300. So that's the problem with some of these stocks. Clearly, some more adjustments need to happen. That's the total income number, falling short of estimate by about close to 300 crores. So let's do one thing. In fact, we'll find out some more details. Okay, margin of 2.5% versus a poll of 5.1%. So that's also not
okay. Let me just take you through the total income. What I mentioned earlier was the standalone business, but the consolidated total income has fallen to 3,165 crores versus 3,441 crores. So it's a disappointment on the top line. It's a big disappointment on the EBITDA and on the bottom line. And the power systems business has taken a huge tumble this time around. It's made a loss versus a profit same time last quarter. So that's the sum and substance of Crompton Greves. All-round disappointment. And if you can just pull up a one-year chart of Crompton Greves, it has had a very steady performance in the last 1 year. So there has been an expectation that the company could at some point in time deliver good returns. So this year itself, in 2015, it hasn't performed much. But if you look at the last 12 months, okay, there as well, there's been some amount of disappointment. But all-round disappointment as far as the earnings performance for Crompton Greaves is concerned. These are quite pathetic margins.
Yeah, these are pathetic margins, and this is ugly number, and I expect some kind of brokerage downgrades as well tomorrow morning first thing. So this 7% fall may not be the end of pain for Crompton Greaves. At least that's what the first look at the numbers is telling us. Let's do one thing. We'll go to Agam for 6 and 60, and then we'll come back for some more analysis of Crompton Greaves. Here's Agam with 6 and 60.
So thanks for that. So right at the top, we're keeping an eye on Reliance Industries. It's going to post its numbers after market hours, and we're expecting the net profits to come at around 6,350 crores. So watch out for that. Moving on to Axis Bank, with a stable set of numbers, looking at top line beating street expectations, but we're also looking at the profits. Once again, more or less in line with street. As far as Wipro is concerned, now that's where we're looking at some amount of pressure building up, and this is after brokerages have maintained a neutral to a negative stance after its quarterly earnings. Moving on, we're also keeping an eye on United Spirits. Good set of numbers coming in, and we're also looking at volumes picking up. The prestige category volumes picking up as much as 5.7%, and we're also looking at profits as against a loss. But some pressure seen in ICICI Bank as well as SBI, and this is after we understand the CARE has cut the JP Associates debt ratings from BB to D. This is on delay of debt repayments. And finally, some pressure seen on Lupin as well, where we understand the company or the management has said that the company may fall short of its FY16 growth guidance of around 15 to 16% owing to a delay in approvals. And that's what we have in terms of 6 and 60.
All right, Agam, thanks for that. Well, just Pull up the Crompton Greaves stock, now almost a 10% slide on that stock, and it is a very ugly number. Just to tell you where the key disappointment has come in, as we were saying, the power systems business, and Pragya is joining us to give us more on that. Pragya, the losses in the power systems business have doubled this time around. It's a loss of 72 crores that the power systems business has seen. An all-round disappointment?
Yeah, Sonia, very shocking numbers. I'm still trying to put my thoughts together. I don't think the company had reported a loss in the power systems business in a long time. Also, 2.5% margins, which they've reported this time on a consolidated basis, is maybe the worst margins that they would have reported in over 17 or 18 quarters. You know, that's all the estimates that I have, which would be one of the lowest margins which they've reported. It's a top-down miss. Whether you talk about the consumer division's business of the company, there also the company's seen a big contraction this time. In fact, on the power systems division, it's a decline of about 19%. The consumer products division of the company has reported just about a very meager growth of about 12 to 13%. One of the lower growths which the company has reported, revenues of just about 971 crores here. The loss, as you said, in the power systems business has come in as a big surprise. I'm assuming the subsidiaries have made a big loss and the company could have made a one-off adjustment here on account of the kind of the depreciation that we've seen with respect to the euro. The depreciation on the euro has been roughly about 16% on a year-on-year basis. So it's possible on the pension liabilities, etc., they would have booked a one-off. We were working with a number of a loss on the subsidiaries worth about 38 to 40 odd crores. I'm assuming this number is way higher, roughly about 60 to 70 odd crores. Could be the back of the envelope calculation. I still have to put those numbers together. But, you know, that has been the real sore problem as far as Crompton Greaves is concerned. Its international subsidiaries keep throwing an ugly number every quarter by quarter. You think that, you know, the losses on this business are over, but, you know, every quarter is a big disappointment there. Also with the kind of commentary that has come in from companies like Havells, Bajaj Electricals, during the course of the quarter have not been encouraging, and that's clearly reflective on the domestic and on the international business of the Crompton Greaves in the consumer products division as well, where growth looks extremely tepid. Whether you talk about the EBITDA margins there as well, looking quite disappointing. This time the company's reported margins of only about 2.4% in the power systems division, 11.8% in the consumer products division, and 10.4% in the industrial systems division. So yeah, like you were pointing it out, it is a top-down miss, and 3,100 crore worth of revenues is what companies reported after almost about 6 to 7 quarters that they've slipped below the 3,400 kind of a mark. So the street should not read these results too well.
Okay, the street should not react too well. The street is not reacting too well, actually, down 8.